subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So, here we are. Mukesh sir, can we continue from where we left last time? Neel and Riya really wish to learn about the practical case studies for tax planning concerning the residential status as an NRI.
Certainly. Chami, I would love to do that because these practical case studies will give not only both of them but all NRIs watching this show some very useful insights into how best tax planning can be done in the context of residential status.
Mukesh sir, my friend who is employed in an IT company in Bangalore has been invited to take up an assignment in Europe. What should he keep in mind while planning to leave India to settle overseas?
Well, Neel, actually this is something which every individual who is all set to become an NRI, because you become an NRI when you are going overseas for employment or self-employment. Now, in such a case, what you would want to do is to ensure that you do not land up in a double tax situation. Because what would happen is, as you would recall, last time we saw that in case of a person who is an Indian citizen and going overseas for employment or self-employment, the second condition of 60 days in the year and 365 days in the preceding 4 years does not apply. So only one test is to be applied, and that is 182 days. Now you would be well advised to ensure that you fulfill this test. Generally, if you can plan, try to ensure that you leave India in the first half of the year and not later than the last week of September, because in the financial year from April to September, even if you are in India at a stretch, you would still want to ensure that you do not overstep the 182 days. And then ensure that if you are returning back to India for some holiday or other purposes, during the same financial year, your total number of days during the year does not exceed 182. Chami, the reason is because otherwise, as in the case of Neel's friend, he has got salary in India for the few months that he's working here, and he would also get salary in Europe.
Yes.
Now, if he has to pay tax in India on both the salaries, because if he is treated as R and OR, the tax would be much higher. So, wherever possible, this is a smart planning that can be done.
Well, that brings us to the case of an NRI who is planning to visit India for longer durations. Keeping in mind the change in rule for stay in India from 182 days to 120 days, what should he keep in mind?
Well, Chami, you have raised a very valid point, because after the change in the rule from 182 to 120 days, it has meant that almost 2 months of time which NRIs used to enjoy earlier in respect of their planned visit to India is now curtailed in case they have income of more than rupees 15 lakhs.
Okay.
If their income in India is less than 15 lakhs, obviously there is no question. But on the presumption that it is more than 15 lakhs and the 120 days rule applies in their case, what they should plan to do is, if they want to stay for a longer duration, they can plan to ensure that the whole visit is planned in such a way that it spills over in 2 financial years.
Okay.
Say for example, somebody comes in the second week of January, stays until the end of the financial year, until end of March, continues to stay in the beginning of the next financial year from April as well, and returns back sometime in the third week of June. This would ensure that the total period can go even up to 238 days and still, you know, with almost an 8-month stay, you will not violate the rule in regard to the R but NOR.
Okay.
You also need to keep in mind, Chami, that in case you still become an R but NOR, you don't have to worry if you do not have any business or profession which is controlled or set up in India. Because ultimately, even in case of an R but NOR, you know, even if you are deemed to be one by virtue of this 120-day rule provision, you will not be required to pay tax on your overseas investment income. So that is still a comfort within which you can do your tax planning.
Mukesh sir, a family friend in Chicago who has lived in the US for nearly 20 years is now planning to return to India for settlement. What does he need to keep in mind?
Well, Riya, the question that your friend has asked is something which almost every returning Indian is concerned about. Because having lived abroad for a number of years, and when you are coming here for settlement, you want to ensure that you enjoy the longest possible period where you can still have income overseas and not pay tax on that in India. So you continue to enjoy. Obviously, once you are in India, it's difficult, you will not be treated as a non-resident. But if you can plan for your R but NOR status, not ordinary resident status, you would, for that period, enjoy the benefit of not being taxed in respect of your overseas investment income. So what do you do for that, Chami? You know, in this case, you have to keep in mind that if you are able to take care of the rule which says that you know, mostly in case of Riya's friend, you know, he would have been in and out of India during the past 7 years preceding the year for short visits. And if that period does not exceed 730 days, then effectively, even for up to 2 years, you know, he would be able to ensure that the R but NOR status is maintained and there is no tax in regard to the foreign income. In any case, the rule of 9 out of 10, you know, can easily be taken care of by enjoying at least 1 year of R but NOR status. So for returning Indians, if you are a smart taxpayer, you would ensure that at least 1 or 2 years you enjoy that special coveted status of R but NOR, by virtue of which you do not have to pay tax on that overseas income. But for that, it is very important, Riya, please advise your friend that you must keep a record of your visits to India. Because when you have to prove that you were here for less than 730 days physically, you will need to have your passports and those dates very clearly tracked out. So it is always good for NRIs to keep a record of their visits to India and keep, even if they have a new passport, their old passports preserved for tax purposes.
Okay. When an NRI comes to be treated as a resident and ordinary resident, his overseas income also gets taxed in India. Is there any provision to grant him relief from double taxation in such cases?
Yes. Chami, fortunately, the Income Tax Act has two sections, 90 and 91, which take care of this typical situation of double taxation and provide relief in respect of the same. Section 90 deals with a situation where India has got double tax avoidance agreements, what is known as DTAAs. And I think we must tell our friends that India has got such DTAAs signed with close to around 90 countries all across the world. So majority of the NRIs, wherever they stay, those countries, the countries of their resident, respectively, they have agreements with India by virtue of which there would be special provisions to grant relief in respect of various incomes on which the double tax impact is arising in India on account of the R and OR status, which the NRI returning attracts. So what you have to take care is to ensure what are those provisions, and in respect of the income that you are required to offer in India on which you have to pay tax, whatever tax you have paid in the foreign country, you are entitled to foreign tax credit, what is known as FTC. But for availing this, you would need to take care to ensure that you file what is known as form number 67 before the due date for filing your return of income, which is generally 31st of July of each financial year, the assessment year respectively starting then. So if you have taken care of this provision, you would get the benefit of set off of that FTC against your Indian tax payable. But you have to keep in mind the rule, and a logical rule, that is that you can get credit against the Indian tax to the extent of the Indian tax liability. So to illustrate, suppose on a particular income you have paid a higher tax overseas, and when you are offering that income, the tax in India is a lower amount, you cannot claim that higher tax and claim a refund from the Indian tax authorities. You can, to the extent of the tax that you have paid, or if there is a differential you have to pay in India, so you take the full credit or take the credit to the extent required and pay only the balance here in India, but you cannot get a refund. But nonetheless, this is a very satisfying situation that you will not be required to end up paying double tax. So this is all about tax planning in the context of the residential status of an NRI.
Thanks a lot, Mukesh sir.
You are most welcome, Riya and Neel. It was a pleasure having you both. And Chami, thanks for bringing them over. I am sure they and through them, many other NRIs have benefited from these two episodes.
Sure, Mukesh sir. Thank you.
Thank you, Charmi.
We really enjoyed this visit to Tax Planning House. We'd now like to invite all of you for dinner. It would be a pleasure.
Okay, I'll confirm with Mukesh sir and get back to you. Till then, goodbye Neel and Riya, and thanks for visiting. Well, Mukesh sir, Neel and Riya are really very happy that they learn all things about the tax. But now they are also keen to earn income here, and also they want to know about the investment in India. And they have a small request for you. They want you to join over a dinner at their hotel. Can you please accept their request?
Surely, it would be my pleasure. Please tell them we will decide at a mutually convenient date.
Sure.